We're going to make this real short. We have a new filing. It's OCC 2021-007. God dang, get your slideshow going, bro, so the Ferris wheel can start spinning. Jesus Christ. Okay. Notice of filing of proposed rule change concerning the options clearing corporation's governance arrangements. Clearing agency statement of the terms of substance in this proposed rule change. Basically, the proposed rule change by OCC would provide OCC's board of directors with the discretion to elect either an executive chairman or non-executive chairman. What's the difference, Charlie? Well, executive chairman is an employee of the company. A non-executive chairman is not an employee of the company. They're wanting the ability to have both, or elect either one or the other. So that's basically this first one. This is going to be a very easy one. By the way, these OCC is a bunch of dicks. All terms with initial capitalization that are not otherwise defined herein, you're going to have to go look for them, Charlie, because we're not going to put them in here for you. You got to go look at OCC's bylaws. Like, yeah, that's what I want to do. F yourself, OCC. Okay, in its filing with the commission, OCC included statements concerning the purpose of and basis for the proposed rule change. Well, that's great. I mean, why wouldn't you? A lot of word salad here. Okay, basically, an executive chairman is typically employed by the company and may work for the company on a full-time or part-time basis. An executive chairman fulfills responsibilities to manage the board while also being more involved with management decisions and day-to-day aspects of the company. A non-executive chairman is typically not an employee of the company. Now, it says typically, so that's not saying that it always can't be, just saying typically is not, and focuses on leading and supporting the board. Self-regulatory organizations, if you don't know what that is by now, come on. SROs, man. SROs registered with the Commission, including registry clearing agencies, employ a variety of board of director and management structures, with both executive and non-executive chairmen presiding over the board of directors of SROs. And it says right here, for example, the National Securities Clearing Corporation and Fixed Income Clearing Corporation have a non-executive chairman presiding over each of their respective boards of directors. Article 3, Section 1 of the bylaws currently require that the board be composed of 9 member directors, 5 exchange directors, 5 public directors, and an executive chairman who also serves as management director. The board is generally responsible for advising management and overseeing the management of business and affairs of OCC. The board performs its oversight role either directly or indirectly through delegation or through delegating certain authority to its committees to ensure that OCC is managed and operated in a manner consistent with the discharge of OCC's regulatory responsibilities as a systematically important financial market utility, and that OCC has the critical capabilities necessary to achieve its objectives and obligations in a safe and efficient manner. Damn, that was a long sentence. The board is also responsible for electing OCC's executive chairman and appointing certain key officers of OCC, including but not limited to OCC's chief executive officer, chief operating officer. God, that got me every time. Including but not limited to OCC's chief executive officer and chief operating officer. Each member of OCC's executive management team is ultimately responsible for the day-to-day operations and performance of his or her applicable business area. Now, OCC's board continually evaluates the governance arrangements at OCC, including the composition of the board and senior management team. OCC's board and management structure have evolved over time in response to changing business conditions and regulatory obligations, as well as to changes in personnel and the knowledge, skills, and experience of its various board members and senior officers. Great. So what does this all mean, dude? It's a lot of word salad. Well, basically, they were nice and summed this all up for me in one page. Basically, as you all heard before, they're looking to revise the rules so that any chairman, whether executive or non-executive, retains the following authority and responsibility currently given to the executive chairman. Rule 505, concerning the authority to extend settlement times. Rule 609, concerning the authority to waive margin deposits in limited circumstances. Rule 1006F, concerning the authority to use clearing fund assets to borrow or otherwise obtain funds from third parties. Rule 1104, interpretation and policy, concerning the authority to elect to use one or more private auctions to liquidate collateral, open positions, and or exercise matured contracts of suspended clearing member. And then concerning the authority, Rule 1110, to appoint an appeals panel to consider and decided appeals by suspended clearing members. So what does this all mean? They're changing the bylaws of the OCC to either appoint non-executive or executive. Why? Because the FICC, NSCC, and DTC all do the same thing. They're also making sure that if the non-executive gets the capability of being a chairman, that they still retain these authoritative actions here. Now, the reason why I'm sharing this one is it is relevant because what word here do we get brought up? Well, force majeure, right? I know I saw it here somewhere. Where the hell did it go? Oh, right here. Force majeure condition exists. Now, you're probably asking, what's force majeure? Well, luckily I've read every dang filing this year just about out of these SROs, and we had these come out from each subsidiary of the DTCC, being DTC, FICC, and the NSCC, relating to confidential information, market disruption events, and other changes. Well, I remember this like it was yesterday. It wasn't that long ago. This was filed on June 25th. And if we hit Control F and we go to force majeure, that word's brought up here too. Now, Rule 60, market disruption and force majeure. The force majeure rule contains provisions that identify the events or circumstances that would be considered a market disruption event, including, for example, events that lead to the suspension or limitation of trading or banking in the markets in which NSCC operates, or the unavailability or failure of any material payment, bank transfer, wire, or securities settlement systems. Under the force majeure rule, during the pendency of a market disruption event, NSCC would be entitled to suspend the provision of or all services, and 2, take or refrain from taking or require members and limited members to take or refrain from taking any actions NSCC considers appropriate to address, alleviate, or mitigate the event and facilitate the continuation of NSCC services as may be practicable. Section 2 of the force majeure rule provides that the board of directors may determine the existence of a market disruption event and the actions to be taken in response thereto. However, if the board of directors is unable to convene, the force majeure rule provides that certain officers may make such determination on an interim basis, which determination is then ratified, modified, or rescinded as soon as practicable by the board of directors. The officers that may make such determination are all senior executive officers of NSCC: Chief Executive Officer, Chief Financial Officer, and Group Chief Risk Officer and General Counsel. Now, remember what we just read? If we go back to this. OCC has the critical capabilities necessary to achieve its objectives and obligations in a safe and efficient manner. The board is also responsible for electing OCC's executive chairman and appointing certain key officers, CEO and COO. Okay? And those executive management team is ultimately responsible for the day-to-day operations and performance of his or her applicable business area. So basically, the fact that we have force majeure brought up here, it's kind of hinting at the fact that we may be using this rule soon. Yeah. So what's the force majeure rule in a nutshell? Well, it might jack your tits a little bit. And if there's any females that listen to me, I'm so sorry if you find that sexually harassing. I'm not by any means. Never mind. Sorry. Jack, you know, it's all good. Force majeure. Check this out. As far as law, it's unforeseeable circumstances that prevent someone from fulfilling a contract. Irresistible compulsion of greater force. Basically, it's greater force. It's related to the concept of an act of God, an event for which no party can be held accountable, such as a hurricane or a tornado, or, you know, MOAS. MOAS. Act of God. That's OCC 007. Sorry, everyone. It's a doozy. And by the way, 5-year-olds do not understand finance, so I apologize.